Good morning, good afternoon, good day, everyone. Thank you so much for joining us today for this panel. We're really excited to have you here, and we're really excited to share with you. I'm joined today by an illustrious panel of colleagues. I have Carmen Villar from Merck, I have Tiffany Benjamin from Eli Lilly, and Christine Brueschke, who is celebrating a birthday today. Sorry, I'm calling it out. And we have the honor of having her join us today on her birthday. I hope we've all had a chance to review their impressive career backgrounds and PQMD's event program. So I will ask that each of them introduce themselves just quickly in the first round. But what I wanted to really sort of set the context for our conversation today, and I think for the timeliness of this conversation is really important, right? ESG, we know the metrics and reporting are fast becoming a business imperative. We know that ESG, although it's thought of as an investor-driven phenomenon, really some would argue that in some ways redefine expectations for companies to go beyond returns, to invest responsibly and support communities, and really focus on purpose, right? And sort of looking at purpose-led investments. But I think as one of the things that was shared today, if any of you were on the earlier sort of keynote with Robert Millett, he shared this morning that public accountability is rising for all sectors. We are all in the business of tackling inequality, justice, global health, disasters, and our response defines business value in the private sector, social value in the NGO sector, and public good for the government sector. So, I thought that was really timely for us to sort of consider our roles. And while ESG is primarily thinking about corporations, the reality is that to accelerate stakeholder engagement, it requires civil society, government, and the private sector. That said, we're seeing that some of this, these leading companies, right, are articulating values. And the examples include, and these are investment companies, BlackRock, the famous Larry Fink letters, Blackstone, State Street, Fidelity, and that's just to name a few. So they're really starting to set the bar on helping us define ESG, helping us bring it to the fore, and helping us think through what are the implications for the work that we all do across these sectors as we think about our partnerships and our engagement. I'm going to share just a few quick facts with you that I thought were really interesting in a recent white paper by Brody Partners. It's entitled Evolving Landscape of ESG. And it's saying that 86% of companies now have an ESG report or a section of ESG in their reporting, which is, again, a growing phenomenon. They cite that in the last 25 years, they've seen a 10-fold increase in reporting requirements. But that's in the last 12 months, they've seen the greatest acceleration and change in that movement. And then the other is the Lastly report suggests that the conversation around S is shifting because of COVID, the Black Lives Matter movement, the Me Too movements, and all of these movements are really calling us to action, right? These are global matters that are shining light on the importance of human and social investments. So I think in short that the S in ESG is becoming a rising star, I think, in the landscape, as it really does serve as a barometer or a proxy for how companies are leveraging their human capital and social investments and thinking about their investments more broadly. This has particularly come to the fore in the context of how we will all meet the post-pandemic recovery capacity challenges ahead of all of us. So with this illustrious panel, I think we will illuminate and learn from their experiences and understand the social dimensions of ESG through the lens of their institutions, and maybe they can share how their organizations are leveraging social and human capital to empower and catalyze change, and in the case of the investor, help us understand what's driving and informing that change. So I'm going to give you just a bit of housekeeping, and just to say that my goal is to get us through 2 rounds of questions, and if time permits, we'll have 1 rapid fire round to close. And that's before we move into a Q&A at the end of the 40 minutes, and then 10 minutes for questions. That's the goal. We'll see how it goes. I'm asking that all of you just chat your questions into the chat section. That'll be helpful, and I'll try to the best of my ability to curate those and drive those questions to our panelists, time permitting. So with that said, I'm going to kick us off with Christine, the birthday girl, and look at in your work, and I think this will be helpful for all of us to understand, sort of from an investor perspective, maybe start the conversation there. And so, in your work with Fidelity International and how you manage their sustainability investments, if you could just lay the groundwork for us and our audience, right, to tell us, how do your fund managers at Fidelity incorporate S and ESG in their investment decision-making process, and help us understand what informs that?
Great. Thank you so much, Veronica. Yes, I am a member of the Sustainable Investing team at Fidelity International. We are the sister yet separate organization from Fidelity Management Research. They are the U.S. business with which you'll all be more familiar. And we, Fidelity International, are entirely based outside of the U.S. So we have offices in Canada, Latin America, and throughout Asia and Europe, with one of our main offices here in the UK, where I am based just now at home outside of London in Windsor. And I really want to thank you for inviting me to join this panel and to speak with this amazing organization. It really is a privilege to be invited to share the investor's perspective on this important topic with experts in your field. Let me also praise the work that PQMD has done and is doing to promote sustainable access to quality healthcare. I don't have to sell anybody here on the importance of S or the social aspects of our business or the importance of sustainability, but it really is wonderful that the types of concerns that you've been focusing on for a long time now, I think I read about a 20-year anniversary, are really, and quite recently, quite in the spotlight. And I was thinking, maybe S should stand for spotlight or spotlight on social. So to lay the groundwork and tell you a little bit from the investor's perspective how Fidelity International incorporates the S and ESG in our investment decision-making process, essentially the short answer is integration and engagement. So we began consciously integrating ESG into our investment decision-making process, making this a formal process beginning in 2018. We began to develop our proprietary internal ESG ratings. We developed that in 2018 and 19, and then in the fall of 2019, so about 18 months ago, seems like a longer time ago than that, but our over 200 fundamental research analysts rolled out ESG ratings for the over 4,500 companies that we cover. So when I say roll out, what we have done is, I don't want to burden you with too much detail about the intricacies of the ratings, but we have analyzed for each company, our fundamental research analysts who really focus on sectors have assessed the material ESG issues and assigned an ESG rating for every company. So since the fall of 2019, we have both the fundamental rating, which is 1 to 9, and an ESG rating of A through E. And it's also really important, very, very topical within our firm to mention that we're in the process of upgrading our proprietary ESG ratings from version 1 to version 2. I might go into more details about that later because I think it is relevant for you to see how we're shifting our thinking about focusing on S as the topic of this panel. But suffice to say that V2, building on V1, will be even more structured, rigorous, and forward-looking assessment across E and S and G for every company under our coverage. We plan to roll that out later this year. And so that's how we integrate the ESG issues, kind of from a 5,000 foot view. And so we have these internal proprietary ESG ratings so that when a fund manager makes an investment decision, they don't have just the traditional financial metrics, but also quite a in-house view on the sustainability metrics of every company. And in addition to using our own internal proprietary ratings, which have some great advantages, we also subscribe to some external rating agencies for ESG, such as MSCI and ISS. So we integrate the ESG considerations into our research and our analysis for every company. And then, so what do we do with that? In addition, on a practical level, as I've said, each portfolio manager, when they're making a decision on whether to buy, hold, or sell a stock, we also have fund level commitments about the sustainability of specific funds. And you've seen this trend go totally through the roof with all investment managers. So for example, we have a range of funds known as the Sustainable Family of Funds, and we have set a requirement that a minimum of 70% of the holdings in that fund range must be rated MSCI, ESG, BBB, and above. Or if it's not rated by MSCI, they must be rated by our own internal analysts as C and above. And if companies fall into that 30% category of not meeting a threshold, or they fall below it, then they have to be deemed to be improving, and we embark upon engagement. And I mentioned our two key things for being active investment managers are integration and engagement. I won't have time, unfortunately, to go into engagement, which is sort of unfortunate because it's quite an important piece of our investment process and our ongoing stewardship of our investments. But just to describe investment, engagement is really the important role that we take actively managing our investments to meet with companies to discuss and understand and provide feedback about ESG issues. So we won't have time to go into all the detail of that, which is kind of an interesting topic unto itself. But speaking specifically about the S in ESG, and I was thinking about this, it might help if I speak about that internal ratings and flesh out some of the ways we're thinking specifically about the S. So I mentioned V1 and V2. So in version 1, we identified a number of E, S, and G issues for each industry subsector and formulated a series of questions on these dimensions that we would learn the answers to in order to derive our rating. So typically we have maybe 5 to 8 at most questions for each company for an overall ESG rating. So depending on the sector, we might have 2 or 3 or 4 E factors, 2 or 3 G factors, 2 or 3 S questions, which by the way is roughly speaking the way MSCI also derives their ESG ratings. They have about 4 to 6 key issues for every company rating, and they do a lot of work on those key issues, but they're only looking at 4 or 5 or 6 questions within a company's ES and G. And as you probably would imagine, in healthcare, S is generally considered the biggest driver among the E, S, and G. So we will typically have in these subsectors, let's say, in the case of healthcare equipment, in our ESG version 1 ratings, we have 7 questions that we base our ratings on. 2 are in the E, 1 or 2 are in the G, and 3 or 4 are in the S. So in version 1, the S questions currently for that sector concern a product's quality systems or their systems around product quality, a company's strategy to manage affordability and fair pricing issues, a company's ability to attract and retain top talent, and the business ethics culture. In V2, we've really enhanced the breadth and depth of our analysis, and it's quite a lot more complicated. Again, I'm going to try to save time and not go too much into that. But now we are having separate ratings for each of the E and the S and the G. Its outputs will be much more in for V2 compared to V1. And instead of conglomerating a small handful of questions into one overall ESG rating, again, like MSCI currently does, we'll have a separate E, separate S, and a separate G, along with some other ways like climate ratings. But we will also conglomerate into a bottom line score, but we'll have separate outputs and impact reports for environmental and for social for every company. Thank you. So I'll try to get away from that much detail, but as a point of comparison, under V2, we have just for social about 20 indicators from which to choose. So for each subsector, the analysts have chosen the material factors and weighted them for a total E score. So for example, in the pharmaceutical sector, our S rating will now be based rather than on 3 or 4, we're looking at 9 questions. And we look at them across the value chain. There's a matrix that we're looking at, level 1 and level 2 and level 3, and pulling all of these together, weighting the different factors. And the factors include things like management approach to employees, business continuity in the face of pandemics and natural disasters, supply chain labor management, product quality, data privacy, responsible marketing, and affordability of basic goods. So again, we're, as you can see, comparing version 1 to version 2, we're going from, along with, I would say the world, a sort of a basic understanding of the S being largely subjective and qualitative to a more sophisticated version with V2 also becoming increasingly objective and quantitative. And I hope I didn't run over too much. I think we'll have more chance to touch on some of these topics and trends a little bit later.
Thank you, Christine. Thank you. Well, we appreciate it. I think at the end of the day, what we wanted is a better sense of how the investor community is really thinking through and developing drivers and better understanding around the scope and the depth and breadth with which companies operate. We're all different. We're all working in different sectors, so it's got to be quite a bit of a challenge. But exciting to hear that things are continuing to evolve, right? And your V2s and V3s, I'm sure, as we go along. But from this point of view, I'd love, Carmen, if you could tell us a little bit, looking at this from a corporate sector, obviously, tell us a little bit about the history of the S at Merck and where do you see the future for the social conversion in investing? The social, the human capital, the I&D, and the social business innovation. Maybe you can give us a little bit of that sense, and then how's the social innovation work you're advancing embrace this new and expanding ESG framework?
Yeah. Well, thanks so much, Veronica, and thanks to PQMD and to this great panel for having me, inviting me to be part of it. It's very exciting to talk about these topics. I feel like for a long time, many of us have been talking about this, and now in light of everything that's happened, as Veronica mentioned, it's actually changing. And I feel like this is an opportunity for us to really have not only the conversation, but actually the impact on where we can go and where we can take the S, as you've been outlining here on this panel. I think from a Merck perspective, we're a large company. We've been in existence for over 125 years. I think when we think about early days of philanthropy, we think about, traditional kind of grant giving. We invested in the partnership around the elimination of river blindness and elephantitis. And we still, that is, I've talked about this at PQMD before, that is one of the longest running public-private partnerships, I think, in history. But that, obviously, as Christine was saying, it's evolved over time. And we moved kind of from that more traditional philanthropy to thinking more about sort of hybrid programs. And many of you are familiar with our Merck for Mothers efforts, where we try to co-create interventions or programs and work with other funders and to address the issue of maternal mortality. We also then started working more to promote and educate industry, but beyond industry, providers and patients and the general public around antimicrobial stewardship, and really much more of that partnership and education and not just giving away money, right? And now, as Christine said, companies, investors, they really want us to integrate the S into all of our business activities. And that's what we're trying to do now. And I think we really are looking at sort of how do we provide access programs. A few years ago, we worked with the Gates Foundation and other folks to do an implant access program so that folks could purchase. We had basically a bulk purchase agreement at a certain price and or guarantee, and that just actually was a great program, and we met our goals in less time than we had ever imagined, and the product got out to those who needed it. I think when we think about what Merck is doing now, as you mentioned, it's not only the focus on the S, it's also human capital, D&I, and as you said, in light of everything that's happened in the last year, investors are very interested in this space, but so are governments and other stakeholders. They expect businesses to rise to this challenge. And I think that's a very important point, because although we are producing ESG reports and we are responding to metrics and frameworks and so forth, what is it that other partners are expecting of us, and how do we do that better, and how do we communicate those partnerships better? I think one example of this from a Merck perspective really is the rise of what's happening in impact investing. And a few years ago, in my group, Social Business Innovation, really thinking about the I and the B, I guess, and all of it, we got permission to invest some money. We got a pot of money to invest in social impact bonds, and really doing some research and looking at what was happening out there in the investment world. There were non-traditional, but also now traditional investors coming forward and saying, we want to do good things. We want to help build clinics. We want to support digital innovation. We want to get new delivery mechanisms out in the market, small biotech firms. So we started investing in some of those social impact bonds. Slower or smaller rates of return, but definitely creating both a beneficial aspect to society and the world, but also getting some revenues back to the company to support our efforts that are considered more ESG or more S, as we're talking about here today. And we've done very well in the last year and a half in terms of returns to the company. I mean, all things considered, you know, again, smaller margins, but we've done very well, and we've helped to advance a lot of important therapeutics and efforts in smaller markets or in lower and middle income countries. So I think this is really a nice example of what we can do and how we have evolved, and how the S is starting to pull through more and more into both business and social impact. Thanks.
Thank you, Carmen. Thank you, Carmen. I appreciate the perspective and the examples. I think that'll be really helpful for our audience to sort of, you know, get their head around the ways in which they can start to think about their ESG profile. So I'll turn it over to you, Tiffany, to sort of, you know, as I think of you in terms as a former corporate governance lawyer at Eli Lilly, and now at the head or at the helm of social impact, you know, you bring a unique perspective to the ESG discussion because you've probably been going at this for a long time. So I know that you've been working in ESG. Can you give us a sense of Eli Lilly's ESG position and strategy, and how you're advancing the social, right, the S in our ESG framework? And how does that look at Lilly? Tell us a little bit more about your story.
Absolutely. And I would like to echo the other panelists in saying thank you for having me. And I love PQMD, so it's exciting and it's a great panel to be on. So I'm really happy to be here. What I can tell you is that in my past life as a lawyer, ESG came up a lot. But frankly, as Christine had highlighted, it was more qualitative as
I think we might have lost her. Is that, yes, is that the case? Christine, Carmen, can you see her?
No, she dropped off. She had dropped off a couple times and come back pretty quickly. So I think she might be back, or if not, we could go to.
Maybe we'll just pivot for
Sure.
1 second. Let me just send her a quick text. All right. So maybe while we wait, and then just appreciate the flexibility of the other two panelists, jumps on. Is to think, you know, Christine, you talked a little bit about your version 2. You know, I think honestly we can probably unpack that in a whole nother webinar. Potentially we might have some folks do that. We might follow up with you on having a pillar talk webinar on the more on the investor perspective. But I'm wondering, in terms of, you know, increasingly rapid pace, you know, there's anticipated policy change under the Biden administration, you know, an SEC. You know, what are the trend lines? And if you could sort of briefly, in, you know, 2 to 3 minutes, give us a sense of like, and I realize that is very limited time frame, but give us a sense, like, what should we brace for, you know, in sort of big picture and high level?
Okay, 2 to 3 minutes is good. I'm going to struggle. So just, you know, like, get the hook and pull me off the stage. I will try to condense. You've mentioned a couple, and I'll just underscore that, again, from the investor perspective, we've seen a big shift from the concept of shareholder capitalism to stakeholder capitalism. That, you know, in 1970, there was the whole introduction of the idea of it's all about profit for the shareholder. And it's a really generational shift to come back around, which when I was looking into it, actually in the 50s and 60s, there was the concept of stakeholders, that it wasn't always a given that it was all about maximum profit. So that's one thing. I'll say another, and then we'll go back to Tiffany. I just want to underscore that's a big shift across the board. And then, as we've all been saying, so much more awareness and concern about the S. So as investors, we really started years ago with the G. We own shares, we have a role in voting, so we get involved in the governance. But then in more recent years, there's been obviously an increased emphasis on E and environmental concerns. And S has been coming along, but absolutely was third on the list behind the other two until COVID. And S just, we do research, we do surveys of analysts, and S was way in front. And it's really come up. We do see a little bit of receding with the easing of the COVID crisis, that S is not as urgent or as pressing or at the top as much, but it's clear that it took a huge jump forward, and it will always now be much more in consideration than it had been. And maybe we can go back to Tiffany, and then I'll hopefully have some more time later, but if not,
Well,
that's fine.
You've set Tiffany up for success. So Tiffany, maybe you can just sort of start us at the top in terms of starting from the governance perspective and from the legal perspective. You had seen this more from a quantitative.
Yeah, so it's been, thanks for the flexibility on Wi-Fi issues that we all know much about in these days. So we really saw this move towards a quantitative need for data, but then also an increase in the need for transparency. And so what we started to note is that people were asking us more and more to put this on public websites and be more transparent about it. So for us, in fact, on May 4th, and we will be hosting a sustainability investor call. It's the first that we've done of these, but we'll be launching our sustainability program and site and sharing about these topics on that date. Because we've heard from the investors that they really want to know more about this, and in particular in the S part. And when we think about the quantitative parts of this, we've started to measure all types of metrics from quantitative, whether it's sort of your DEI data, whether it is our global health work with our 30 by 30 program to reach 30 million people by 2030 in under-resourced settings, whether it's our racial justice work, where the foundation and the company are working together to provide $25 million to focus on combating racial inequity, as well as 25,000 volunteer service hours. So we've seen this emphasis on the numbers and the metrics and on a need to talk about it really publicly, which has been really good. But we've also seen that it's not just investors who are interested in this, it's other stakeholders. So you have to make all of the content fit with your purpose story, your story about who you are, and then make sure everything is clear and consistent, and then regularly updated. So for us, that's been our focus, is really going to launch something big and transparent and public, as we see that that's the desire of investors, but frankly, other stakeholders and our employees.
Exactly. Employees are clamoring for more day over day, and we're seeing that, I think, at all of our companies. So Carmen, I'll turn it over to you for just a sec, and just give us a sense of, as you're reflecting on Tiffany and Christine's comments, as a social innovation leader, what would you want to better understand under the social issues in this ESG landscape? Helping create standardized reporting. I mean, what are the things that are on your mind?
Sure.
And driving your day-to-day building of your strategy?
Yeah, sure. If I could start, Veronica, I just want to clarify one thing from my previous points. I saw Dale had a question in the chat, and I wasn't just on impact investing. I wasn't really saying that the social impact is lower than the financial impact. What I was trying to say is that our returns on our investments, our PGMs, as you might call it in the business world, are smaller than they would be in a regular business venture. That was all I was saying. I'm hoping that our social impact is actually more. So I just wanted to clarify that real quick. I think, Veronica, to your question, the S is huge. There are a lot of measurement tools out there in terms of how we look at our efforts, but it varies by industry. And I think that I'll just talk about an example hot off the presses today. Merck is entering a partnership. We announced these partnerships with voluntary licensing in India for our product, our antiviral product. And hopefully this will help India address the emergency that they are facing right now. However, measuring that in the larger scheme of things is going to be a little bit difficult, right? What's that impact on actually fighting this emergency that India is in the throes of right now? I don't know, and it may be hard to measure, but I hope that we can contribute to that effort in a meaningful way, and hopefully we will figure out over time the best way to measure those kinds of efforts. I would say also, it's important to advocate for focus in our efforts. I've had people tell me, wow, you guys cover so many different things. So how can we really focus more on what's happening, not only inside the company, but in the external environment? And how do we bring those two things together and understand what's important in that broader ecosystem, including investors, obviously. And so being able to determine with some confidence that what we're doing really are addressing the issues that matter. And, you know, we talk about materiality assessments all the time, but I think it's so easy to get pulled in different directions depending on what's happening in current events and so forth and so on. You know, we talked a little bit, we mentioned reporting and reporting frameworks. I think, you know, we've seen an increased interest in this administration in the US and the Biden administration around ESG issues, and with appointment of a person to the SEC to actually oversee ESG issues. And I'm hoping that any standardization efforts, I think that definitely they're needed because there are many different frameworks and sometimes we're a little bit all over the place. But I would say that I hope that in any kind of standardization effort that we can be at the table working together to develop what those frameworks look like. We know that people who have the frameworks out there or who measure us against certain standards, you know, as Christine was saying, put a lot of work into that methodology. And hopefully, if the government does go forward with something like that, we can be involved in those discussions and be an active partner to make sure that it actually, we can measure, we can live up to expectations, and that we are truly partners in this together. So I think, you know, that's going to be a really, really important point. And then I do love your idea about a pillar talk with Christine and or other investors. I think understanding that better, what those expectations, what those V1, V2 metrics are, and how we can really understand those expectations will be really, really helpful also going forward. And you know, maybe we change a little bit and adjust accordingly our efforts so that we have more focus, so that we have more standardization, and so that we understand the clarity of what's expected and how we're measured.
Thank you. I think that'll lead me to actually back to you, Tiffany. I'm glad to see you back on. I have a question for you. I think as we think about, if you reflect on Carmen and Christine's comments, you know, I think, you know, you and I had a conversation prior to you know, when we were preparing for this, in terms of, you know, how do you balance all of the resources and the needs when you're thinking about ESG, and all of it needs attention at a company. I'd love to hear your perspective on that.
Yeah, thanks for asking. I won't lie, I think it's a challenge, right? So you look at how you balance sort of the governance overarching the whole thing, and then you have to look at how you're balancing the E versus the S versus the G. And the S is actually quite broad if you think about it. So you then look at the S's and figure out how you prioritize within the S's, right? And so one of the challenges is prioritizing, but also, while the reporting is extremely important, making sure that you're prioritizing doing the work itself over just reporting it, right? So I think sometimes we get lost in the space of focusing on what we can put in bullet points or what we can put in a spreadsheet, when it's more important to be able to talk about the impact of the work you've done, how it's driven for improvement, and how you can hold accountable the people within your organization for it. So to me, I think the most important part about prioritization is making sure that you're setting up prioritization and governance that focuses on the work and not necessarily on the reporting, because the reporting work should flow from the actual work itself. And I think we all often get lost in that. And you should be able to answer Christine's questions or, you know, fill out the SASB framework focus areas quite easily if the work's in place. So for us, I think that's been really, really important, is to focus on what you can do. Having said that, prioritization is always a challenge within all organizations. And so we struggle with it all of the time, right? You look at, when should I refresh these goals? How often should I be updating this information? Is it on an annual basis? Is it regular? What happens when investor interest changes? And frankly, what we've seen over the last year in particular, as it relates to COVID and as it relates to racial justice, has shown that we needed to do more in certain parts of social, and frankly, not even do more, but talk more, which is why, again, the work part is so important to all of this.
Yeah. Thank you. I think that's great. Christine, if you could maybe bring us home before we open up to a couple of questions. I'm just thinking in terms of, from what you've heard, what golden nuggets can you share with us, right, in terms of sort of helping us understand what's ahead? I think I definitely will take you up on the offer I've made you to have you speak on a Pillar Talk webinar, and potentially with other investor groups to just help ground us a little bit more and better understand the landscape. But what golden nuggets would you have for our audience for us to think through? And it's a corporate and NGO balance, right? That are on this call. We'd love to hear some final thoughts on that.
Okay, how much time do I have to distill these golden nuggets?
Let's say 2 to 3 minutes.
Okay, so let's see. I guess the golden nuggets that I would have would be a little bit to summarize and underscore what the other speakers have said. And I'm completely aligned and with you on the challenges and the opportunities. And I guess, first and foremost, want to acknowledge and agree with what Carmen said about it being quite iterative and collaborative. And I sometimes worry that we as investors might act or might seem to be nothing but demanding. And I think at this stage, and in fact, I think I was a fundamental analyst in a previous life, and I think that is maybe more the role, the traditional role. But at this point, as investors, we're looking, we realize it's iterative. We all say it's a journey. It really is a journey. And we want to be collaborative with companies. Nobody understands your companies better than you do. So I guess a golden nugget about the idea of materiality, we're definitely moving into, and it's quite acknowledged in Europe. I don't know exactly if it's as much in the US yet, but the concept of double materiality. So we have financial materiality and we have non-financial materiality, and they can both be very important and need to be considered. So I touched on that a little bit earlier with, moving from V1 to V2 and from shareholder to stakeholder capitalism. But I think that it's quite important we realize we're in a double materiality world, and we want to see companies I love as an analyst to open up and see the materiality assessment when a company's done it and got stakeholders, customers, employees, suppliers together and really tried to assess what's material to us as a business, because that's helpful for us as investors. And that starts to help us work together to have a framework. And when you asked about all the different frameworks and reporting things, I can only imagine it's like a nightmare and it's going to get worse. But I do think we're going to get there the same way, 100 years ago, financial reporting was nothing like it is today. There are loads of challenges with non-financial reporting, but we're in the process. It's exciting. There are challenges, but there are also opportunities. So I think I might have rambled a little bit if I had some more sort of specific things to say, but again, they take longer, and it definitely seems like there's a follow-up conversation coming here. So yeah, I guess I'll leave it at that for now.
And that in and of itself is a golden nugget. We have a follow-up conversation ahead of us.